All right. Hello, good evening, ladies and gentlemen. Welcome to Facebook Live Cashflow Fridays with I'm Possible Terence. All right. Now, so we took a break last week and we're back once again. All right. Now, so market, all right, has recovered. All right. But is this the start of a new bull run as some of the people are talking about out there? All right. Or is there something that you must know, right, that is causing this market, all right, to create a facade? Yeah, okay, now, so I'm going to be sharing with you in today's session, right, okay, and it's going to be golden nuggets once again, all right, okay, you're going to be learning many things throughout the sessions in terms of what I'm saying to you, all right, okay, it may sound a little bit unorthodox, but it's all from experiences and understanding how the market works. Now, I say this to all of you because, right, yes, technicals can show you a picture, right, but technicals is pretty much science, yeah, okay, but in everything we do, right, at certain moments, yeah, okay, or at extreme moments, you must understand this. When the market goes into an extreme mode, right, science doesn't work that well anymore, right? You need to understand the logic, right, and the sense behind what's going on, right? Okay, so that you can be ahead of the curve, right? As we all know right now, okay, technical analysis is always going to put you behind, yeah, okay, it's always going to be slower, it's always going to be late, yeah, okay, so if this market is going to suddenly switch and turn on you, right, okay, you need to know what to do, right, before it actually happens. Right, because just like it recovered that quickly, right, it can actually fall off the cliff, right, equally fast. Yeah, okay, now, so I've been reading reports that people are saying, hey, you know, the NASDAQ has started a new rally, right, the S&P has not, all right, but it may lead, right, okay, that means the NASDAQ may lead the S&P, right, going into new bull run, all right, okay, I'm going to tell you right now, okay, don't believe the hype. Yeah, okay, I may be wrong, right, okay, please don't understand me wrongly over here. Yeah, okay, but the way I see things, right, the way I understand the markets, right, there's more things at play over here. All right, now, so before I talk about this, right, let's greet hello to everyone over here, right, and hello, Patrick. All right, thank you very much for joining me once again. All right, those of you who are joining me for the first time, yeah, okay, you see the big banner on the screen right now. Okay, I need you to go to that website that you see on the banner, all right, streamyard.com/Facebook. All right, okay, you'll be brought to a page and you'll see a Facebook banner. All right, click on it and then approve your profile. All right, now what it does over here is that, hey, you know, at the end of the day, when you do leave comments during the session, right, we will actually be able to see who's leaving the comments. All right, so thank you very much, Hoy, over here. Good to see you. All right, and Eileen, John, all right, and Facebook user. All right, now, so if you don't go to the website, this is how you look like, all right, on my end of this Facebook Live session. Yeah, okay, now, so just some rules before we start. If you do have questions that you want to ask me, all right, but if you type it out in a comment, all right, and you appear to me as a Facebook user, all right, okay, I will not answer these questions. All right, now I do it in a form because I want courtesy. I want to know who I'm replying to. All right, okay, because I run these sessions, all right, okay, pretty much on a voluntary basis. All right, okay, to show all of you that it's actually possible, even in 2023, even in this volatile, dangerous market, right, to create better than expected returns and still sleep well at night. Yeah, so the portfolio that I've been building right now has been hitting the target 11 months in a row. Yeah, okay, now if we have to shave it off, I'll probably say we are at 10.8. Yeah, okay, all right, now we missed 2 months by a lot less than $50. Yeah, okay, all right, but for the rest, we have over exceeded the targets. Yeah, okay, now, so we've done this 11 months in a row, right, while the markets, right, have actually gone nowhere or down, you know, pretty much down from last year. Right now, so we do this, right, in a form of showing you that you can believe, right, that investment success can be done. Yeah, I know many of you have tried different ways out there, right, but one thing you lack is really consistency. All right, now, so with, you know, the techniques that I built over here, I want to actually prove to you that it can be done, right? It's true, it doesn't have to be difficult, and you don't have to lose sleep, right, over it. Yeah, okay, now, with all that said and done, thank you very much for being with me once again. I'm going to remove the banner before I forget, all right, and move on to disclaimer. All right, now I'm going to be talking about my trade ideas, my life trades, you know, kind of thoughts that I'm thinking of doing on my portfolio today. Yeah, okay, all right, but by no means are there any form of recommendations for you to take those trades. All right, please be aware that all forms of trading bears a risk of loss. So you must understand your own risk appetite and all the risks involved, right, in whatever I say and do in this session before you decide, right, to follow any of these trades inside of your own accounts. Okay. Yeah, all right, now, so with that said over here, I'm going to show you something very creative today. Now, before I go, right, how many of you would actually like to, how many of you have been following, right, my live sessions, and today, right, you want to see, right, how I handle, right, some of my bad trades, right? How many of you would like to see me, right, do some, amazing things, yeah, okay, to some trades, right, that have fallen down the pecking order, yeah, okay, how can I switch around, all right, and repair those situations, right, without hurting, all right, okay, my cash flows for that month, yeah, okay, if you want to see this over here, I need you to comment me, all right, and plus one more thing. Can you do that for me? All right, is it fair enough for you to do one more thing for me apart from typing me? Is that okay? Okay, here's what I want you to do. Yeah, okay, all right, now I want all of you, all right, to help me share this video out. That's all. Yeah, okay, I promise you, all right, it's gonna be something where you're gonna go get up. Yeah, all right, okay, I promise you, all right, that's something you never ever thought of, right? Okay, because this is something that I've learned how to deal with, all right, from my own trading experience of handling bad trades that I got myself into. Yeah, okay, and all I ask for return is for you to hit that share button. That's it. Yeah, okay, now why do I want you to hit that share button? Let me justify it, right? Because what I'm going to teach you today, all right, actually costs, all right, hundreds or even thousands of dollars, all right, inside paid programs, all right, okay, to learn these skill sets. Okay, but I'm willingly sharing this today, right, absolutely free. Yeah, okay, and I know this information, all right, okay, can shock many people, all right, and go, oh my God, yeah, I've never thought of something like that before. Okay, now, so because it's that valuable, all right, I just want you, right, to help me share out this information so that we can start reaching out to more people, right, and they too can believe, right, that they can gather or create their own investment success. All right, so can we do that? Now, all right, okay, so please go ahead, all right, hit the like, hit the share button, all right, okay, and then I'll proceed from there, yeah? All right, now, so thank you very much once again, all right, for joining me in this live session. All right, now, so the like buttons are not going up as well. Let's pull it up, all right, ladies and gentlemen, let's go. All right, it's going to be a shocking session for all of you. So I want this session, all right, to gather the biggest likes, all right, and the shares that I can get out there, right, so that we can reach out to many people out there. Yeah, okay, now, so in the meantime, let me just share what am I doing in this Friday public Facebook live sessions. All right, now, so my main strategy, all right, inside these live sessions are my own created strategies, which I call, all right, the portfolio puts. Now, so what is exactly a portfolio put? All right, now, it's very similar, right, to what people call selling cash secured puts. Now, again, what is cash secured puts, Terence? Simple, right? Now, you're selling naked put options, right, with full capital, right, to buy those shares, right? Why? Because when you sell put options, right, the obligation is that you may have to end up buying those shares, right, if your customer claims against you, right? But by preparing the full amount, all right, okay, and all right, I will never face into margin problems. I will never run out of capital. Yeah, okay, so in that way, right, the worst case scenario I can be, right, is become stock owners. Yeah, but I'm a stock owner, which I'm fully affording all the shares. Right, so it's no problem because they're all good companies. Right, I just have to sit and wait, right, for them to recover. So pretty much like many of you, right, who have bought stocks and are losing money right now, right, what are you doing? You're just holding, right? Yeah, okay, but if they're quality stocks, you know that they're going to come back. Right, so it's pretty much that logic, right? But I do it in a different way, right? Where I actually take on a little bit of leverage, right? Now, why do I want to take on a little bit of leverage? Because it makes sense, right? Do any of you buy properties paying a full cash upfront? None of you would. But then, Terence, property is different. No, it's not different. Okay, why do I say it's not different? Because if you're touching only blue chip stocks, right, isn't it the same kind of safety category? Yeah, okay, why? Because you know the main explanation for property is that it's always there. Right? But when I talk about blue chip companies, when we talk about companies like Pfizer, when we talk about companies like 3M, aren't they always there? They've always been there, right? They've been there for 50 years, 60 years, longer than some of the properties you own, isn't it? All right, so it's the same category that we're talking about, right? And yet for property, right, you're actually willing to put down 10, 20, or 30% in cash and take the rest in loans. Am I doing something like that? No, I'm actually playing it the other way. Yeah, okay, all right. I'm actually putting up 70% in cash. Yeah, okay, and I'm taking 30% loans. Yeah, okay, you see where I'm going now? All right, so instead of selling a cash secure puts where I put 100% of the cost, I'm actually going to sell a portfolio put where I only put up 70% of the cost. All right, now, so some of you would then say, but Terence, what if it becomes a sign? Simple. All right, once it becomes a sign, that's when I reallocate and put in 100% to those that have become stocks. See now? Because when they are not stocks, I can continue to leverage, all right, and create better returns. But once they become stock ownership, then I should not leverage on those stocks, right? I should have enough capital to hold them, all right? Okay, just in case anything corrupts up. See that? Yeah, okay, so when I do it this way, I'm actually still very, very safe, right? Why? Because when you open a stock trading portfolio, right, brokers are actually willing to lend you capital, right? And most of this is called margin, right? Margin is actually 50%, right, of your stock ownership, right? Okay, 50% of your stock ownership. So this portfolio where we started with 100,000, right? Okay, if it were all stocks, right, I could actually buy up to 200,000 worth of stocks. You see where I'm going now, right? You're essentially getting double of your capital if you're trading stocks. But am I using that? No, right? I didn't use all the amount. Yeah, so you see where I'm going, right? And most, right? If I diversify, like you see in my portfolio right now, there are about 10 stocks or more, right? Okay, if all 10 stocks of them are severely undervalued, right, the moment I get in, right? Okay, do you think all of them will get into trouble at the same time? Very unlikely, right? Okay, now this is already most, kind of like not an ideal situation. Why? Because in my portfolio, I have 1, 2, 3, 4, 5, 6 stocks that are assigned to me, right? But has it hampered me, right, from continuing to hit my goals, right, which is $2,000 every month? It hasn't. Yeah, it hasn't. Yeah, okay, so I figure out, I work my ways, right? Okay, I can't really say it's magic, yeah, okay, but something that I know, right, and accumulated from my own experience, right? So in these live sessions, I just want to show them to you. Yeah, okay, all right. Now, so none of you have moved the light, so maybe I should just take my intention of showing this, valuable thing to you, right, out of the picture today. Okay, all right. Now, so I'm sorry if I sound harsh. Yeah, okay, all right. But it's a reciprocative. Yeah, okay. I'm committing my time. I'm running these sessions. I'm giving out information that are worth thousands of dollars, right? And they don't cost you a thing, right? They don't cost you a thing, right? All I ask for you, all right, is a favor to share the likes. Yeah, okay, share the likes and also share this video out. All right. So if you think that these informations are not valuable, and for that reason you don't want to like it, you don't want to share it, then maybe, right? Okay, whatever I prepared to share isn't that valuable enough. So maybe I should take it off the shelf. Yeah, okay, all right. Now, so we'll see how it goes. All right. Anyway, I'll just run my session first. Okay, and then we'll decide at the end. Okay, just by looking at the lights, because I can see it on my screen, obviously. Yeah, okay, that's why I know it's not moving. Yeah, okay, all right. Based on the number of you who are attending the session right now, all right, and the likes that I see on the the Facebook live session is not tallying at all. Yeah, okay. Now, so with that said, all right, let's get to the portfolio first. All right, okay, I'll still run my content. All right, okay. Now, so we'll look at the SPY. Now, so SPY is the market. SPY is the S&P 500 ETF. So where are we right now? All right, we're hitting a snag. All right, what do I mean by we're hitting a snag? All right, we're hitting a short-term resistance because the last time the market bounced, right, it hit this level, which is 4,050. All right, okay, so now we are right on the dot. All right, we're right on the dot. And you know what? There's a significance to this. We are not only right on the dot, we are right on the dot at the very end of this month. And not just that, we're right on the dot at the very end of Q1, quarter one. All right, portfolio dressing is going on, ladies and gentlemen. All right, and when portfolio dressing is going on, this is what happens. Portfolio managers start loading up their portfolios on all the pretty looking stocks. So at the moment, what kind of stocks are looking pretty? Not financials, right, but tech. Right, so all tech stocks, which are already expensive, right, are getting even more expensive over the last 1 week. Why? Because portfolio managers need to load them so that they can show them as their holdings in their stock portfolio. All right, but once the quarter is over, they can unload, and they will unload. Why? Because they know it's expensive too. Right, so they want to get their positions out before it collapses on them. Yeah, they've loaded up pre the new month or the new quarter. All right, okay, so once come the new quarter, right, when they sense an opportunity to get out and unload, they will do so, right, so they can move into safer trades. Yeah, okay, now this is just how do I say self-preservation, right? Now, why do I say self-preservation, right? Because all they want to do is to hold on to their job, but holding on to their job means they have to hold on to investors, hold on to their customers. All right, now, so they don't want to show banking stocks for a very simple reason. Right now, if you were a client of these fund managers, right, and your fund managers just send you a report telling you, hey, we heavily loaded, right, BAC, right, during this quarter, right, what do you think you're going to say to them? Right, you're probably going to fire them, won't it? Right, either you're going to fire them or you're going to ask them very, very difficult questions. Either way, they're not going to like it because either they waste their time answering your questions, right, or they lose you as a customer. Right, so it's going to make it hard for them. So instead of giving themselves these kind of headaches, right, where do they park their money? Simple. They park their money, right, in stocks that look like this. Meta. Right? Isn't Meta still having lowered revenue in terms of ads? Yeah, all right, but the market is pushing it up, right? And Google, right? Isn't Google facing a headwind as well? Isn't it? Aren't they firing people? All right, okay, but the stock is staying strong, right? Where else? Microsoft, right? Isn't Microsoft already expensive, right? Didn't they just say that the cloud division isn't doing as well, right? And there's much more competition, right? Aren't they laying off people as well, right? But why is this stock going up? You see where I'm going? All right, this is where all the money is flowing right now. And right, if you know how the index works, right? If you know how the index works, right? Okay, 20% and more right now, right, of the index composition, right, is reliable on heavy tech. Yeah, okay, on tech. Right. So if these stocks like Meta, Google, Apple, Microsoft continues to stay strong, right, it alone itself is enough to drag the index up. Right. And that's why, despite banking sector coming down, right, the tech sector has caught up. Right. So we have that balancing effect, if in case you haven't realized. Because financial sector, takes out about 20%, right? Tech also takes out about 20%. So if this one goes down, but that one goes up, right? It's kind of like a balancing beam over here. Right? That's why you haven't seen the market, really created. Right? Although it's the financials that went down. Right? We didn't see an effect like 2008. Why? Because tech has gone up. Yeah, all right. Okay, so this is a kind of like a rotating chair game, right? That fund managers are playing right now, right? That many of you, right, who are not aware, right, might not know as well. Right? But I've already pre-warned, right? I've already told a lot of my students this, right? Okay, to be prepared. Why? Right? While many people are thinking, hey, let's load up on these stocks, right? I'm telling them this is the time to get out. All right. Okay. If you miss the boat right now to get out on all these stocks I just mentioned, right? Don't say it's too late. Right? I may be wrong, right? But it doesn't harm, right, for you to take some. You don't have to take all, right? But you can take some off the table. Right? Okay, because if it's gonna come down, right? Okay, it's gonna hurt. Yeah, why? Because conditions haven't improved, right? Interest rates are still going to go up once this banking crisis stabilizes, right? Inflation is still red hot, right? People are still getting fired from their jobs. Yeah, okay. You think it's getting better? I don't know. You decide, right? But you know one thing: if you constantly follow what the mainstream media says, all right, okay, you're going to be left crying at the end of everything, right? Why? Because, all right, they're most of the time wrong, right? They're late to the game as well. All right. Okay. So I want to I want to help you stay ahead of the game. All right. That's why I'm still insisting on running these sessions. Right. Okay. But seriously, all right. Okay. It's bearing down on me. Yeah. Okay. I can tell you this. Right. Based on the attendance that I'm getting right now. Yeah. Okay. Based on the metrics that you're seeing right now. Okay. It seems like many of you see that the value the information that I'm sharing every week is probably not valuable to you, or probably it's not exciting enough. All right. Okay. Now, so there are two ways to look at investment. You can be excited, right, or you can just make money. I don't know which camp you belong to, right, but I definitely belong to the second camp. All right. Okay. I don't care what I do, right, whether it's sexy or whether it's boring, but as long as I make money, right, I'm doing it right. Yeah. Okay. As we say this over here, in what? In Chinese, I guess. Yeah. Okay. If I didn't remember wrongly, right, a cat that catches the mice or the mouse, right, is a good cat, right, and that's how I choose to believe. Yeah. Okay. Now, so my strategies may not be the most exciting ones, right, but it's helping you grow your money, right, the hardest at the moment. Yeah. Okay. With a lot of consistency. All right. Now, so with that said, all right, let's go. Okay. Let's come back to the SPY. Now, so if it hits the resistance and come 1st April, right, okay, all the tech stocks starts getting unloaded, right, okay, that means, right, we can have a double top, right? You see this now? See where the trend is, right? And where's this double top going to end, right? The double top has a support right at the 200-day moving average yet again. Yeah, okay, so if it breaks the 200-day moving average, it can quickly come back to 3,800, all right? And are there catalysts for that to happen? Yes, there is. All right, okay, because Fed is still going to come out, and right now, earnings seasons have just kicked off again. All right, so if earnings are going to show weakening signs, all right, okay, that's going to bode badly, all right, for the entire market. All right, so there's definitely risk involved right now. Okay, so how am I going to position myself? Same. What do I mean by the same? Simple. Right, this is the time to shift out, right, of stocks that have ran up, right, stocks that are getting expensive, right, and reload into stocks that are absolutely undervalued. Right? Why? Because they're limited downside, right? When anybody who wants to sell the stock have already sold it. Yeah, okay, there are no sellers, right? All we're doing is waiting for the buyers to kick in. See now? Right? But if I'm still in, right, when the sellers have not sold off yet, right? If they start selling, right, my stock has a way to go down. All right, I don't want to be in those stocks at the moment. All right, because if I'm late, I can be punished severely. All right, so ladies and gentlemen, let's go to our stock portfolio positions right now, right, and let's deal with them, okay? All right, now, so this is our portfolio. All right, I'll just put it at the bottom, all right, and we go through them one by one, okay? Now, so our first position over here is WBA, all right? So we have those stocks at $45, all right? Now, and this is what WBA has done, all right? Remember I said I won't sell those call options when it's going down, all right? See the reason why now? Because when it bounces, all right, okay, I would be in a difficult situation, just like our Intel trade today. Right? I can manage it, but I don't want to manage all of them in this manner. Yeah, okay, now, so WBA has since bounced, right, and we now have a resistance at about $35, right? Okay, so it's bounced from a low of 31, right, all the way up to 34. So that's about 10% bounce, okay, about 10% bounce, right? Now, so let's see, right, what I can get, okay, if I want to sell a call option. Yeah, now, so if I sell a call option for 21st April, that's 3 weeks, right? For something decent, I can get about $36. All right, now, so let's see $36. All right, $36 is going to put me above the resistance. All right, okay, now, and the 200-day moving average is about 37. Right, I think that's a pretty good point over here. All right, now, so I think we can create some income, right, by selling the 36 call. So we can do that for about 26 cents today. All right, okay, we can do that for about 26 cents today. So let's go ahead and do that. All right, so I'm going to sell the WBA. Right, April 31st, $36 calls. All right, I have, let's see, I have 500 stocks, so I can sell 5 call options. Right, and how much can I get for them today? 26. Done. Voila. All right, ladies and gentlemen, all right, the first trade for tonight, all right, at 10:54 p.m., all right, okay, WBA April 36 call. I sold 5 of them for 26 cents. Yeah, okay, now, so let's go record our first cash flow for tonight. Okay, copy, insert, there we go, trade number 1, WBA, cover call, 21st April, 36. All right, done on 31st of March, all right, 0.26. Right now, so that's going to add $130 in cash flow, right, into my accounts over here. All right, okay, now, so I like that, all right, and there's a reason why I'm doing that today. I'll show you in a while, okay? I'll show you in a while, hang in there. Yeah, okay, now, so let's go to our next one over here, which is Intel. Okay, everyone good so far? Everyone following so far? Can you just type a comment in the chat box, all right, if everything's good, you're following up? Okay, so while waiting for your comments, let me just share with you my philosophy. All right, okay, for every trade action I take, be it whether closing it, be it whether opening a new one or managing the trade, right, there's always a reason, right, behind why I do certain things, right? Hence, right, a lot of my trading is based on logic, right, on the background, right? And if you can base it on logic, right, you get consistency. Why? Because my decision-making process is always going to follow the same route, right? So that means, right, if I keep deciding in the same manner, all right, okay, I will get consistency in terms of my outcomes of every trade. Yeah. Okay, now, so many of you are following up, so that's a good thing. Yeah, okay, next one. All right, let's go with Intel. All right, so we already have a covered call on Intel with a 28 strike that expires today. All right, so I definitely have to deal with this today. Why? If I don't deal with it, all right, okay, my stocks are going to get taken away from me, all right, at $28. Do I really want to let go of my stocks at $28? Can you leave a comment and let me know? Do you think I want to let my stock go at $28? Good, Eileen. I think you don't want to as well, right? Now, but the thing is, what can I do? Right now, if all of you remember, right, 2 weeks ago, all right, I said, all right, the reason why I think, right, I can continue the trade is because I believe it's going to hit and come back down. Right, and the key was this, right? It actually came back down. If you remember here, right? It actually came back down, but we didn't have a live session, so I couldn't close the trade. All right, okay. Now I promised all of you I will only manage my trades whenever I'm live with all of you. All right, so be it. All right, things have gotten worse, but I will deal with it. Yeah, okay. I can't change the fact, but I deal with it. Yeah, okay, so how am I going to deal with it today? Right, technically the same as the last time. Right, now what do I mean by the same as the last time? Looky look. Right, now I have a $28 call option. Right, it's going to expire today. Now, so the $28 call option, can all of you tell me, how much do you think I will need to pay to close it off today? How much do you think I need to pay to close it off today? Good. All right, about 455. All right, now, so looking at it over here, right, we have a bid and ask of 445 to 460. Right, and this option right now is in the money by about 455. 455. Yeah, okay, so it's going to cost us about the intrinsic value because it's already the last day, right, to close it. Right now, so if I close it today, I have to sacrifice $4.55. But, okay, can I create an extension again? I can. Right, I can move it and now sell, right, the 21st of April, right now. And I will do it because, right, I can sell, right, the 21st of April, 28.50, all right, okay, 28.50 for about 4.30. Can you see that? Yeah, okay, now, so when I make this switch, I'm paying 4.55, right, okay, but, all right, I'm only getting back, all right, I'm getting back how much? 4.30, all right, how much am I going to lose, right, from this switch around? Can anybody tell me? How much will I lose from this switch around? Okay, so let me help you out again. Okay, I'm going to pay 4.55 and I'm only going to get back 4.30. All right, okay, so do I make or do I lose? And how much do I lose? All right, about 25 cents, right? Now, so I'm losing about $25, all right, for each option. Right now, but have I made that amount back, right, with the call options that I'm selling for WBA? Have I made that amount back? Have I squared it off, right, with the call options I'm selling on WBA today? So you see where I'm going right now, ladies and gentlemen? Yeah, okay, now, yes, I sacrificed one, right, but I made it back with another, right? And that's what you can do, right, when you have an entire portfolio, right, okay, and you're managing, you know, the conditions. Yeah, okay, but it's going against us, so I seem to like have to pay more right now. Oh, there you go. I closed it for 460. Yeah, all right, now, so I managed to get it done for 460. Now, right, I want to go ahead, all right, and get the other option sold. All right, so let's see how much I can get for that, okay? Hang on for a minute. April 21st, 28.50. All right, so I closed 5. All right, I'm going to sell 5. All right, now, so 28.50, I can sell it for about 4. Let's see if I can get 4.35. Oh, well. 4.34. Good enough. All right, here we go, ladies and gentlemen. All right, okay, so I bought back my 5 call options for 28 call. All right, okay, at 460. Yeah, okay, and I sold back 5, right, that expires on April 21st for 434. Okay, 434. All right, okay, now, so let's square it off. Now, so with that switch around, okay, let's have a look, okay? All right, so 460 minus 434. Right, so I lost 26 cents. I should have done it the other way around. Yep. Oh, that's okay. All right, I closed it for 26 cents, so I lost 130. Nicely squared off. Can you see? Oh, man. All right, it's nicely squared off. Just nice over here. All right, okay. Now, but of course, in exchange over here, right, what I have right now, okay, is the, let me include it. Okay, is the new covered call for 21st of April. Right, 28.5. Okay, and done today on 31st of March, all right, for blank, all right? So I'm going to record it as $0 again. Why? Because I squared off the losses, all right, and I don't have any cash flow from it right now. Yeah, okay, now, so some of you will be asking, Terence, all right, but why are you willing to do this? One, for very simple reason. My belief is still the same. All right, remember what I said just now about the current portfolio dressing, right? And what tech stocks, the QQQ or the NASDAQ index have enjoyed? Money flow. They've enjoyed money flow. All right, so once the quarter is over, right, the money flow will come out of these tech stocks. Why? Because the economic conditions hasn't really changed. Yeah, okay, now, so if that's the situation, right, Intel has had a good run. You must understand that, right? Intel has ran from $24 all the way to 32. That's an $8 run up. That's a 20% bounce, right, from the bottom, right? So it needs a cooling off period. Yeah, see where I'm going? All right, now, so all I want from this stock is a cooling off period, all right, okay, and, all right, I can start squaring that covered call off, right, and start afresh again. Yeah, see where I'm going? Yeah, okay, because I really don't think this stock is going to run up, right, immediately in one straight line. Yeah, okay, so I'm doing management control over here. Yeah, okay, and you're seeing it live, right? You're seeing it live. Yeah, okay, I know some of you are going to ask, Terence, but what's going to end out of it? I can't tell you right now, right? Continue joining me, right, and continue supporting these sessions, right, so that I'll keep running it every Friday. Yeah, okay, and you can see what I'm going to continue doing, right, because the positions are in my accounts, right, so I have to manage it until I turn profitability, won't I? Yeah, okay, all right, now, so let's continue. All right, now, so that is done. Right, our next trade over here is VZ. All right, so VZ, nothing much. It has enjoyed a run. Yeah, okay, but earnings is coming around the corner. So I still want to wait. Right, I don't need much additional cash flow, so I'm good. Yeah, okay, I'm good. All right, now, so our next trade over here is TSN. All right, so TSN, not much to show. Bounced only a little, so nah, no thank you. All right, so I'll continue to hold that position. All right, the next one over here is HBI. All right, now, so HBI, right, hasn't really shown much strength. All right, it hasn't really shown much strength. So a lot of retail stocks are not actually doing well. So I'm actually planning, all right, okay, kind of like a turnaround action on this, right, which is why I wanted to share earlier. Okay, all right, but I just see that the lights and the shares are not going up yet. All right, so I'll leave it to all of you. All right, okay, if you want to know exactly what I'm going to do. All right, okay, because I'm going to leave this to the last action for today. Yeah, okay, I'm going to leave this to the last action for today. All right, but based on what I'm seeing right now, it's not there. Yeah, okay, it's not there. Okay, all right, now let's move on to the next one, Pfizer. All right, so I'm assigned Pfizer at 47.50. Right, many of you were fearful because it dropped to 39. Right, okay, we're still bouncing up. Yeah, okay, we're still bouncing up. That's a good thing because it's secured by a positive divergence, right, on the RSI indicator. So that's a good strength, right, in this, bounce back up. Right, so for now, I'm holding that position. Right, now the next one we have over here is Devon. Right, so I have Devon for 21st April, right, a $50 put. Okay, a $50 put. I sold it for 176. Let's see how much it's worth today. Right, because stock plummeted. Right, okay, the stock plummeted and now it's bounced back up. See now, it's bounced back up. All right, now, so if I were to close this put option today, all right, if I close this put option today, all right, I would pay about 140. See that? 140, ladies and gentlemen. All right, now, so it would mean that I can still make a profit. All right, it would mean I'll still make a profit, but I still got 3 weeks to go. All right, 3 weeks to go. All right, so I'm going to hang on to this. Yeah, really, I'm going to hang on to this. All right, but before I make that decision, let me just do a quick look. No, I'm going to hang on to it. Yeah. Okay. All right. So I hang on to this position. All right. Next one, Apache. All right. 37.50 for 235 is still under the water. All right. So I'm staying in this position as well. All right. Now, next one, ENB. All right. So we have ENB for 37.50. All right. And it has came back alive. Looky look. All right. When you trade good stocks, all right, yes, they may have a quick, come off. All right. But people recognize the value, right? And it bounces back as quickly. Yeah. All right. Okay. So we're back in a good position right now. Right. And the 37.50 puts only cost about 40 cents. All right. I sold this about 47. So I'm about break even. Yeah. So I'm holding on. All right. Our next position, EMR. So we have EMR at $80. Right. EMR at $80. So where's EMR today? EMR has gone to 86, ladies and gentlemen. All right. 86. So my $80 puts, how much is it worth? For the last done is 45. All right, so let's see, 45. Should we close it? Ladies and gentlemen? Oh man, heck, Close it off. All right. Okay, let's go ahead and close off our EMR position, shouldn't we? Yeah, it makes heck a lot of sense. Yeah. All right, now, so let's go. EMR, $80 puts. All right, so I'm going to close 3 of them. All right, let's see how much it's going to cost us today. All right, $80 puts, 3 of them. Let's try 40 first, okay? Done, 45. All right, it doesn't want to take my 40, so it gave me 45. There we go, ladies and gentlemen. EMR, April 21st, $80 puts. I bought back 3 at 45 cents. Yeah, okay, now all of you can witness these trades live, right? These trades are live because you see them filled, right, on, an officially live traded account. Yeah, okay, so those orders are actually placed, all right? So we closed it here for 45 cents. That's $142 in cash flow net, right, after closing the trade. All right, okay, and all right, I'm releasing the margin. All right, it's not needed anymore. All right, so that's a good thing. All right, awesome. All right, so another winning trade over here. All right, who says we can't produce winners, right, during these times? All right, another winner. All right, now next one, Micron. All right, so if you follow Micron, all right, it did well despite terrible earnings. Yes, it did well despite terrible earnings. So we're gonna close it today. All right, so we have a $55 puts, right? It costs us about 48 cents today. I'm closing it off. All right, $55 puts. We sold it for 183. We're going to close it today. Yeah? Okay, so let's go ahead and close. Micron. $55 puts. All right. We have 3 of them. All right, how much is it today? $55 puts, 49. All right, there we go. I closed 3 of them for 49. There we go. Micron, April 21st, $55 puts, right? Bought 3 at 49 cents. Yes, send the Ross. All right, okay, terrible earnings doesn't mean the stock is going to go down. All right, why? It's always about the forecast of the next earnings. Yeah, okay, forward pricing. Yeah, okay, now, so 49 cents, we're done. Right, and now we're slightly under 2,000. Oh my God. What does that mean? It means I definitely have to put on new trades today. All right, now next trade, VFC. All right, so VFC is right about nowhere. Yep. Okay, so no actions. Right, 3M, no actions as well. Right, AT&T. Right, we have an 18 put. All right, how much is it worth today? 20 cents. All right, 20 cents. Should I take it? Half the premiums for another 3 more weeks. I'll just keep it. All right, it doesn't cost much. It's an $18 stock, so it doesn't cost much. All right, so we'll keep it. All right, now our last trade is FITB. So banks haven't really bounced that much, so no actions. All right, no actions. All right, now, so I'm going to reload. All right, today I'm going to reload. All right, ladies and gentlemen, one stock that I'm going to reload on. All right, today. Okay, ladies and gentlemen, ready or not? All right, the first stock I'm going to reload today is Hawk. All right, I've traded Hawk before, which is Harley Davidson, and I'm going to trade it once again today. All right, why? Okay, Harley Davidsons have provided strong earnings. Let me take you to the last 1 year. All right, 1 year. Where's my 1 year? Oh my God. 1 year, 1 day. All right, now, so 145, 178, what? 28 cents. So it made about $2 and $3. It made about $5. $5. All right, so the PE of about 7 times makes sense. Okay, it makes sense. But I want to show you some numbers over here. For those of you who know simple numbers, no complication, but simple numbers. Can you see before COVID, right, the earnings per share? Right, this company is making some good money before COVID. But the problem is, right, COVID is a scratch. Okay, because all retail stocks didn't do well. Okay, but what matters coming out of COVID is the important part. Can you see what happens to the earnings after COVID? Did this company lost any strength or any market demand at all? No, they didn't. Right? Can you see this year? Right? Okay, or last year, they did even better. Right? And not just that, can you see that their sales per share is also going higher? This shows you this company has loyalty. right? This company has branding. This company has followers. Yeah, okay, and it's not expensive. That's the most important part, right? Because if you compare this, right, with a similar company like Nike, Nike has branding, Nike has following, but Nike is expensive. All right, okay, Nike is expensive. Why? Can you see? Right, Nike makes about the same sales per share. Right, Harley Davidson was about $34 per share, right? Okay, Nike is about $29 per share. It's lower than that. But how much is the stock price? 121. Right, how much was Harley Davidson? Right, double digits. Right, can you see simple comparison right now? Right, their earnings and their sales per share is similar, but the stock price is literally triple, right, of the other. Right, so this clearly you can see how expensive it is. 34 times earnings for a retail stock, really? All right, okay, versus Harley Davidson, right, which is trading 7, all right, and the 5-year average is 12, right, which means this stock can literally double, right, and only chase up its average pricing. All right, see where I go? Good fundamentals, a stock that's been punished, a stock that's been trashed to the ground. All right, has it been trashed to the ground? You see 51, right, down to 35, right? It's crazy. I'm going to capitalize on this, right? So it's at 37 right now. All right, let's see what I can get. All right, I'm going to capitalize for 2 months at a go right now. Yeah, okay, so I'm going to go for 30. I think 36 is pretty good. All right, so let's go for 36. Right, so I'm going to go after one. Man, some of you jumped my gun again. So it looks like 150 is not going to make the cut. It's okay. I'm not wasting any time. I'm just taking whatever the bid is, 145. Right. So, ladies and gentlemen, I've added four portfolio puts for Harley Davidson. Right. May 19, $36 puts. I've sold 4 for 145. All right. Okay. 4 for 145. All right. Let's go. Let's go. All right. So this is going to be trade 76. All right. Trade 76. All right. 4 contracts. Harley Davidson. Yes, 19 May. What strike was it? 36. Right, did it on 31st March. Right, 1.45. Right, so that gives me a cash flow of $290. All right, $290. Am I back up? Let's see. 139. Yeah, we're back above. All right, we're back. All right, but this is only half the cash flow. Right, okay, so I'll record the other half, right, for the month of May. All right, so now, right, even for May itself, I'm already up, right, to what? To there we go. Right, for the month of May, I'm already up to $500. Right, I'm a quarter of the way. All right, I've hit this month's target and I quarter the next month's target. See why I love this? Right, see how I keep things simple and why I love it. Yeah, okay, it's a double entry, so I'll undo it. So my portfolio is now at 131%. It's comfortable. I say my limit is 140, right? So I'm only at 131. I'm fully comfortable. Yeah. All right, now, so ladies and gentlemen, let's do this. Let's do this. How many of you really want to learn something today? Right? If you really want to learn something today, all right, please go ahead and type me. All right, thank you very much, Anthony. Okay, I'm going to do one thing right now. Okay, I'm just going to go to my Facebook right now. Okay, I'm going to check. Okay, I'm just going to check, all right, and see, okay, what's happening with the shares and with the likes, okay? All right, just to be fair to everyone, right? I see why now. The likes are coming in, but they're all the likes from the same people. They're all the same people. Yeah, okay. Oh, man. Yep. All right, okay. The shares are very, very light. Yeah, okay, that means not many people are sharing. Yeah, okay, but okay, here's what I'm gonna do. Okay, right now there are a few more Facebook users over here. Right, if this is your comment, you're a Facebook user. Right, if this is your comment, you're a Facebook user. Right, so I'm just gonna flash the banner one more time. Right, okay, I need you to go to this website, streamyard.com/Facebook. Right, and then approve your profile. Right, so that I'll be able to know who's leaving comments. Okay, right now here's what I'm gonna do. I'm gonna play nice today. Yeah, okay, I'm gonna play nice today. So I'm gonna share with you. All right, okay, why? Because I think this is important. Yeah, okay, I think it's very valuable, right? Since you're live with me, you committed your time, all right? I want to give something back. Yeah, okay, all right, now, but I really need you, all right? If you like the information I've shared, all right, if you think it's been very useful, all right, and of course it works, right? Okay, I want you to start roping in, right, some of your friends just to come in, right, and have a look. Yeah, okay, just tell them, all right? It's 1 hour on Friday, right? What can they lose, right? But if they like it, they can actually start making their money work harder. Yeah, okay, can you do that for me? All right, can you just do that for me going forward? All right, let's make this work together, yeah? Okay, now, so I have a trade prepared, right? But instead of putting it as a new trade, right, here's what I'm going to do. All right, I'm going to start fixing, right, the HBI position. Why? I want to lighten the load. Yeah, okay, I want to lighten my load on HBI. Now, but the problem is, if I were to sell my HBI stocks today, okay, if I were to sell it today, how much am I going to lose per share? Yeah, okay, don't talk about the total amount. Let's talk about per share. All right, let's help me out, ladies and gentlemen. Yeah, how much will I lose per share if I sell the stock off for $5.10 today? Good. All right, okay, about 390. Yeah, 390, not 490. Don't make it worse for me. Okay. All right, 390, right? Okay, now, so here's what I'm going to do. All right, I'm going to split this position up, okay? I'm going to split this position up, all right? Now, why am I going to split this position up? I'm not going to liquidate all of it. I'm going to close half of it, okay? I'm going to close half of it today, right? So I'm going to sell off half the shares, right, at $5.10, which is the market price right now. Can you see? Bid price 510, right? Ask price 511. Yeah, okay, now, so I'm going to sell off 200 shares of HBI. Yeah, okay, hang on. $5.10. Okay, done. Oh man. All right, good. All right, now, so I sold off 200 shares. All right, I sold off 200 shares of HBI. All right, at 510. Yeah, okay, now, so that becomes a realized loss. Okay, that becomes a realized loss, and I'm going to record it over here. Okay, all right, now, so I'm going to calculate it off right now. All right, so $5.10 right, minus $9 times 200 shares. Ah, man, it didn't work. Right now, so I just reduced my cash flow by 780 for this month because I realized the loss, right? Okay, now, so my cash flow is hit down to 1466. Now, but I can do something. All right, I can do something. So let me show you what I'm going to do right now. Okay, I'm going to turn around. I'm going to find a severely undervalued stock, all right, and I'm going to claw this money back. Okay, now why? Because I have a strong belief, right, that this stock is going to bounce. Yeah, so because I believe it's going to bounce, right, and the conditions are there, I'm just switching, right, from HBI into this stock instead. Right, so instead of waiting for the recovery on HBI, right, I'm waiting for the recovery on another stock. You see where I'm going? Right now, and it's a retail stock as well. Right, okay, it's a retail stock as well. Right, it's Macy's. Right, I've traded Macy's before. Right, and I've traded Macy's before around this area. All right, now, so let me tell you why I like Macy's right now. Number one, the stock has fallen. Number two, the company is still making good profits. Can you see that? All right, okay, $1.08, $1.52, $1.83. So this company makes about $4, right, in 2023, $4, right, over the last 4 quarters, right, and the stock is only 17. This puts this retail stock at 4 PE, 4 PE, right, and there's another news that came out this week. The CEO is retiring, right, and the stock plummeted. The stock sold off because the CEO is going to retire. But what many people don't know is that this CEO has been around for a very long time. So he's retiring because of old age. And he hasn't done a very good job. He hasn't done a very good job. All right. Now, so what I've heard, right, is they brought in a new CEO, right, which is in charge of another retail called Bloomingdale's. All right. And that guy has a good track record. He's been doing well at Bloomingdale's. So while the market, all right, is thinking this is a bad deal, all right, okay, we should actually take this advantage, all right, okay, and lap on it. Yeah, why? Because the stock has been punished. They brought in a stronger person to manage the company. I like the upside. And the stock is cheap. I like the upside. Yeah, okay, now, so here's what I'm going to do. All right, I'm actually going to sell. Okay, here's what I'm going to do. I'm going to sell, right, the $20, all right, I'm going to sell the $20, all right, put options. Okay, all right, the $20 put options. Okay, and okay, I'm going to sell 4 of them. All right, I closed 200 shares, right? But I'm going to sell 4 of these put options. Yeah, okay, why? Because first, I was already comfortable, right, to take this as a new trade. Can you see where I'm going? All right, and for such a stock, usually I'll take about 3 or 4 contracts. Yeah, okay, so all I'm doing right now is I'm using that trade, right, to recuperate some of the losses. Yeah, okay, now, so I'm going to sell the main one over here, right? So let's go do that. All right, so May, $20. $270. Amen. Yep, 276. All right, so I got it at 276, ladies and gentlemen. So I sold 4 of these put options over here at 276. All right, now, so let's go and record this down. All right, and all right, now we'll see what's the net effect. Okay, all right, I'll show you what's the net effect. All right, and that goes into answering, right, some of the questions that you're asking, like Chris Racker over here. Yeah, okay, so Chris Racker is asking why 20. Yeah, okay, now first, okay, I have the objective of recuperating my loss in my head. Yeah, okay, and I don't want it to be too far away because, right, this stock, right, has what, 49 days, right, to get itself over $20. Can it do that? I don't know, right, but I expect it to go up. So even if it gets close enough to $20, right, I can close this put option for a very small amount. See where I'm going? Right, and can continue it, right, for the next month again after that. All right, see where I'm going now? Yeah, okay, now, so let's see what it has done, right, in terms of my recovery, all right? Now, so trade 77, Macy's, 4 options, all right, 19 on May as well. Yes, what strike was it? 20. So it's not a very expensive stock as well, $20, right? And I pocketed 276. There we go. See now, ladies and gentlemen, all right, I realized what? I realized a $780 loss, right? Okay, but I claw back $552. I claw back $552. Yeah, okay, and I'm at 2018. See where I'm going? Yeah, okay, I'm back above $2,000, ladies and gentlemen, for this month. Right now, so what have I done over here? Right, effectively, let me explain to you. Right, because I've also created an additional $500 for the next month. So can you see where I'm prepping myself? Next month, I'm already halfway there. You're not even into the expiry yet. Okay, we've got 1.5 months to go, but I'm already there. Yeah, okay, and for this month, I've still achieved my target. Right, I've still achieved my target. Yeah, and on top of that, yeah, I've got out of half a bad position. Can you see where I'm going? Right, this is going to be our first losing trade, right? But I recovered it. Yeah, okay, with the next one. right? And it didn't affect my cash flow at all. Right? See where I'm going? Right? How many of you are surprised by this move? How many of you have never thought of something like that? Yes, Facebook. Okay, unfortunately, Facebook user, this is your question. All right, so I'm going to stick to my rule before I answer it. Okay, I need you to go to streamyard.com/Facebook. All right, approve your profile, and post your question again. I'll be more than happy to answer it after that. Okay. All right, so please go ahead and do that. Yeah, Chris. All right, team. All right, that means very deep. Yes, that comes from experience. You know why? For example, I give you a case. All right, now let's say we compare two banking stocks, no reference, no meaning at all. Okay, right? You have OCBC, you have DBS. Yeah, okay. OCBC is on the down, right? You're losing $3 on it, right? But you see upside on DBS, right? Isn't it exactly kind of like a similar switch? You're switching from one bank to another. Yeah, okay. So selling off OCBC, you take a loss of $3, and then you buy DBS. And in the next 49 days, you expect DBS to go up by $3. So if it does, have you recovered the $3? You have, right? Agreed? But in the meantime, if you continue waiting for OCBC, right, the stock may just stay there and do nothing. So all I'm doing over here is managing my risk. Why? Because this stock, Macy's, have more potential for the upside now because of the story, right? Okay, wow, HBI is just, it needs time. There's a lot of damage. There's no good news coming out of it, so it needs much more time. All right, so instead of just waiting for the time, yeah, okay, why don't I switch it out? And like many of you said, HBI has also cut their dividends. So that's another risk factor. All right, so I want to cut my exposure. I want to do it step by step. All right, okay, and in fact, for the last 200 stock positions, if I can find another stock that is in the same situation as Macy's, right, I'll probably do the same thing. See where I'm going? Yeah, okay, so I can get out my trades over here step by step. All right, okay, even if they're losing money trades, I can get out of them step by step without damaging my cash flow. Right, without damaging my cash flow. And you know what, ladies and gentlemen, I'm done for today. Right, I'm done for today. We have hit this month's target. We're still on course to hit this month's target. Yeah, okay, and my portfolio is only back at 140% exposure. Have I increased my exposure? No, I didn't. I closed some trades for profits today. I, wipe out 50% of a bad trade. Right, I recovered it. All right, and we're back to square one. All right, wait, I need to put this off. This is double entry. ITB is also a double entry. I'm actually only at 133. Oh my God. All right. I'm only at 133% exposure. See that? All right. I can literally add one more of Macy's. All right. I can literally do one more Macy's, but I'm not going to do that. Yeah. Okay, ladies and gentlemen. All right. We are net. We're set. All right. So right now, if I'm going to include this month's cash flow, oh, it's already included. Oh, good. So this portfolio has grown from $100,000 since starting it in May 2022, yeah, okay, to $127,000, right, going into April, which is the final month before it hits 1 year. Yeah, have we surpassed our target? We have. Because what's the goal? To make $2,000 every month. Right? We started with a $100,000 portfolio, right? And the aim was to make $2,000 every month. Right? So by now, right, or by the end of the year, we should be looking at $24,000 in cash flow. Right, but have we already passed that? Yes, we have. I have not even added. I've added next month. Oh, I've added this month. Yes. Right, we've surpassed it by $3,000. All right, we did it. We did it. All right, we did it, ladies and gentlemen. Yeah. Okay. All right. Now, so will you need additional buying power to keep this Macy's straight? Yes, it's back to 70%. Do you see that, Katie? All right, so Katie is asking, hey, Terence, do you need additional buying power to keep this M trade? All right, it's all allocated. You see that? 5,006. Yeah? All right, 4 options over here cost me 5,006 because it's what? 70%, right? Yeah? Okay, now, so Gavin, all right, hey, for Intel, all right, is there a possibility that the stock taken away before expiry? Gavin, do you know what? You saw the expiry today. We were what? More than $4 in the money? Right, and is today the last day? It was, right? Did I still have my option position? I did. I just closed it today. Okay, so I hope that answers your question over here. Yeah, okay, all right. Now, so Chris Racker, all right, yes, but how do you find these good stocks? Come to one of my mentorship programs, ladies and gentlemen, because what I do for my students, I make their life easy the moment we start, right? They are handed a basket of all these kind of stocks that you see me trade over here, right? And they are handed scanners to scan for these kind of severely undervalued stocks. Yeah, okay, now, so while you see me do it, right, in a very simplified manner over here, yeah, okay, and you like it, if you like what I'm doing over here, right, you can see the beauty behind it, right, and you want to do this, right, with a much smaller capital, like 2,000, like 5,000, like $10,000 accounts, yeah, okay, decide to join one of my mentorship programs available, right, okay, you can start trading with us every single week, right, okay, for an entire year, right, to build similar portfolios, right, and create returns like what you're seeing over here. Because we have a similar portfolio trading similar stocks right now, and we built it since 9 months ago, right, and it's already hitting 45%, right, 9 months and 45%. Yeah, okay, on a $10,000 account, on a $2,000 account, it's all done. Yeah, okay, now, so if this is something you're after over here, right, and you like it, you feel like you can sleep well at night so far over the last 11 months, right, join us. Yeah, all right, join us. Yeah, okay, now, so Andy, you're saying that all right, if it does, but seldom it does. Yeah, okay, I've explained it many times. Yeah, all right, so you're asking with the assigned stocks, is there enough cash to sell puts? That's what I've been doing, right? Because all my exposures is here. Can you see? I just added up everything, right? And after adding up everything, the total exposure is 168,000. Right, so I need 168,000 to hold all these trade positions that I have right now. Right, and my account has 127,000. So like I said, all right, I'm a little bit leveraged right now. I'm leveraged to 133%. So I'm 33% over, all right, my capital, right, which I'm comfortable. Yeah, okay, which I'm comfortable. All right. Tanya, all right, okay, if you are super unlucky, is it possible to get my Intel called away yesterday? Yes, actually, if you think about it this way, right? Yeah, even if your Intel stock gets called away, right, all you need to do is to buy it again, all right, and then just start, all right, buy it, put it back, all right, and then do what I did today. Isn't it kind of the same? All right, okay, because your customer took it away from you, all right, so just put it back. Yeah, okay, all right, now, so yes, assigned stocks are cash secure. Let me show you. All right, so if you look at this, all right, I have 500 shares of WBA at $45. Right, if you look at the calculation formula, it's a full 100%. All right, so there's no leverage on the stock positions. Right, I don't take any leverage on the stocks, so I hold them as full cash positions. Yeah, all right, so I'm definitely liquid. Yeah, all right, now, so, Facebook user. All right, okay, Facebook user, unfortunately, I don't know who you are, all right, but since you said, all right, you are now going to be part of our community, I warmly welcome you. Thank you very much. Yeah, okay, now, so ladies and gentlemen, we're done. Okay, we're done. All right, I'll be back with you next week, all right, for another session. Let's see where our position ends, all right, but for now, all right, month number 12, all right, we are right on course to hit $2,000 yet again, all right, 12 out of 12, or let's say 11.8 out of 12. All right, I think I fared pretty well. Yeah, okay, I don't know what you think, all right, but I think we fared pretty well. All right, that's about 9. Same thing. All right, you don't need to count everything over here because every position, right, it all adds up. Can you see where I'm going? It all adds up. So, I need to free this up. There we go. Okay, so whenever there's an open position, right, the allocation is over here, right, and then I total it up, right, at the bottom. Yeah. All right. Now, so another Facebook user over here. All right. Okay. If you do have interest in some of our mentorship programs available, all right, let me flash the email of my support team. All right. So the email is at the banner at the bottom right now. All right. Okay. So you can send them an email. All right. Okay. And they can get in touch with you and provide you more information. Okay. Thank you very much. All right. Thank you once again for joining me for this live Facebook session. All right. I hope you enjoyed the content. All right, and continue to hit the likes and shares. All right, help me reach out. Remember, all right, bring someone in the next live trading sessions. All right, share with them the good word. Share with them how we have hit the targets 12 months in a row. Right, despite this current difficult environment. All right, okay, and let's come back and make more cash flow. All right, ladies and gentlemen, this is I'm Possible Terence. Thank you very much. All right, I hope you have a great weekend ahead. All right, and bye bye for now. See all of you soon again. Bye bye. Good night.